Sure. Yeah. Matt Steinbrecher. Basically a payments and money guy. Been doing started my career in Forex and then moved into global payments and been doing that for about a decade. And yeah, own a company called Sound Commerce. I was a founder of Reach originally. We were a big merchant of record. We helped a lot of people sell globally. Huge presence on Shopify and pretty much any other e-commerce platform. Had a great partnership with Checkout Champ as well. Um, and yeah, recently built out Sound Commerce, and basically we do kind of two things. One is bespoke merchant account application processes, so helping people find mids, and the other is really like a white glove payment operations service. So yeah, that's a little about me, man. What about you, Matt?
I'm Matt Marano. I'm the founder and CEO of Checkout Champ. I've been around for a long time. I've been doing this, as you can tell by the gray in my beard. I always say that, I guess, but it's I've been doing this a very long time. I think 1998 we were doing subscription payments. We had our own product company, and that's really how our technology was born and built. Um, we have within the platform over 270 gateway and payment options from around the world. Our platform, for those of you that are selling internationally, we do dynamic currency conversion based on geographic region, based on IP address. We have a couple of cool technologies that help you avoid the cross-border and conversion rates, which is interesting. So if you're a Checkout Champ client, ask your account manager about that. Everyone who works with us knows they have their own dedicated rep. But we're talking about all things payments here today, but we're also going to talk a little bit about Black Friday, Cyber Monday, and how to dominate in a very high competitive landscape of e-com products. There are more e-com stores now than I've ever seen in my life, and they're popping up because people don't want to, you know, the economy's changed. There are great products and great marketing channels in which to go out and make your mark in e-com. And if you have a lookalike product to one or several others, how do you become dominant? And we're going to share some of the techniques that some of the largest brands that you've ever heard of use Checkout Champ and how they leverage it to win in those segments. So today, let's just say that because Black Friday and Cyber Monday and the holidays are coming, we want to first talk about how to make sure you're protected. Last year, the year before that, we saw like right before or shortly thereafter the holidays, a ton of merchant accounts just get shut down or suspended and money held for 180 days or greater. It's scary because I mean that's your margin. That's your operating expense. Your operating fund. And Matt, what is your experience with that? Have you want to talk about that a little bit?
Yeah, I think the big behemoth in the room for sure for a lot of e-com merchants is Stripe and Shopify, Shopify Payments, which are ultimately like they're the same provider. Shopify Payments is powered by Stripe, so it's Stripe under the hood. Um, Shopify just kind of built it in nice and sexy and branded it as themselves and their platform, but it's all the same mechanics at the end of the day when we look at like the underlying payment infrastructure. And the beauty of their solution and like why Stripe is such a dominant player in the market is because you can just sign up and get an account immediately. So, if you want to start out a career in drop shipping and e-com, you can spin up a Shopify store, get a Stripe account, and you're off to the races, basically find someone on AliExpress and you can get your whole business set up in 24, 48 hours max, which is awesome. That's pretty cool. When we started in e-commerce, it was not like that.
Not at all.
So it's pretty amazing what technology can do, but that convenience, right? That immediate satisfaction of being able to get those merchant accounts comes with a cost. And for sure, what we're seeing, particularly this year, but always right around the holidays, is e-commerce is extremely cyclical. We all know this. This is our peak period. But from a payment processor's perspective, and a banking perspective, like you do a lot of business in a very short amount of time, and then it falls off a cliff in Q1. Um, Typically, like fashion for sure, anything that's kind of consumable, stuff like that. Nutra usually has a stronger Q1 for supplements and nutraceuticals and vitamins, but generally speaking, Q4 is the biggest time of year. But from a banking perspective, you make a bunch of money and then your sales kind of start to fall off in Q1 because naturally as US consumers in particular in most Western markets, people stop spending money in the early part of the following year. And what that means is these banks basically have a risk. They have a liability because they see that, there's going to be high refund rates from orders that got shipped just before Christmas, or maybe they didn't get there for, in time for Christmas or, Hanukkah or whatever holiday you're celebrating. And, then all of a sudden the person charges it back or they want to refund it and ship it back. And then now all of a sudden you have to get all that money that you made and then give it back to customers. And so long story short, the reality is that these payment processors do have an underlying risk. And what they see as you start to scale very quickly is that you're a newer business typically, or maybe an existing business that didn't have that much of a scale. And then all of a sudden you two, three, 400x what your typical sales were the prior months. Or if you're a brand new account, they see you go from zero to $500,000 in sales. They're very concerned about your risk profile. And so because they do have a financial risk. If you go under as a business, they have to pay for all those chargebacks. They have to refund all those customers' credit cards because that's how their agreement works with the customer's bank. Um, so basically we see that they have a risk, and as easy as it is to open these accounts, it's even easier to get shut down. And the main reason is they're funding startups, right? You cannot, Matt and I have both built businesses, and we know we both built businesses that always put individual humans on every account that we onboard. There's always a personal representative that you can talk to. Stripe does not do that. Look at the amount of merchants that they have. They have, tens of millions of merchants active live, and they definitely do not have that many employees, 5, 6, 7,000 employees. Most of them are developers and back office. So the harsh reality is that they cannot scale and give everyone that gray area, look that you may need as an e-commerce seller. So it's all done through AI. It's all risk automation. So you hit $500,000 in sales your first month, boom, you're shut down. 50% hold. We're taking all your money. Thanks for 500 grand. They freeze your cash. They don't say anything. And that's just what they do. It's automated risk, and you have to work with people that work there and get tagged on an account and work with insiders and try to get money out, or have to hire lawyers and get your money out, or get the funds, get the, deposits pulled, stuff like that. So these are all the things that everyone's kind of handling. And there is an inherent risk that Stripe and Shopify payments have, but for a lot of ecom guys, it's just not worth it, right? It's like, maybe you have something that's less sexy. It might not work as well as Shopify payments. Like in terms of having all the branded and like click and it's live, stuff like that. You might have to do a little bit more sweat equity up front and legwork, but it's really worth it at the end of the day because you have confidence that when you hit 500,000 in your first month or a million in your first month or even 100,000 in your first month, you're not going to get some arbitrary bullshit letter from your bank and your payment processor that says, "Hey man, we're holding your money." And now all of a sudden your business is spiraling. So that's kind of the long story of, why this is happening. And this year in particular, it's very, very bad. It always happens around the holidays, but this year in particular, it's very bad because Visa came out with a new program called VAMP, and that has cracked down a lot on chargeback management and things like that. And so, Stripe via Shopify Payments, even PayPal, everyone is sort of cracking down very heavily on any new business that doesn't have like a consistent chargeback history because of these new visa regulations that came out. So we always have shutdowns in Q4 or around Q4, either right before the holidays or right after the holidays. But now we're seeing it massively increasing, probably 10x of anything that I've seen in the past decade working in this space.
So let's break this down for a minute. And let me start by saying to the group of folks that are listening to Matt and I ramble on, there's a Q&A. Matt, go ahead and open it on yours also and review that while I'm talking. We're gonna address all the questions that come up in this. So use the Q&A to type your questions. We're gonna answer them live as we can. But I'm gonna break down a little bit what Matt had said. When someone comes into e-commerce, it is, very easy. I think the first place people will go for a merchant account will be Stripe or Shopify payments. But what I want you to think about is there's 2.5 million Shopify stores. How many people really qualify for that low risk type of account through Shopify? Is it 50%, 60%, 70%? There's a huge segment of the market that won't even qualify for that type of merchant account. So now you're subject to applying for other merchant accounts. Some may be a little bit higher risk. And how do you manage that through Shopify? And then to protect yourself against, potential shutdowns, what do you do and how do you manage that? And so I have a couple of answers for the group. And Stripe is great when you're starting out, and it might be something that you use your entire, product lifeline or timeline as you own that brand. But it should not be the end all be all only processing that you have. Within our platform, the reason so many large brands like using this is you have the ability to add as many merchant accounts as you want. You can say, okay, I want 80% of my sales volume going to Stripe. I want 10% going to this merchant account, 10% going to that merchant account. So you're always keeping the merchant accounts warmed up. But if something, God forbid, happens where Stripe decides to, hold back because they go through those risk sweeps, it seems like they do it towards the end of every year. You still have alternate processing. You have something as a backup to keep you in business and selling, right? It sucks that they're going to hold your money for 120 to 180 days, but at least you can keep selling.
Yeah.
When Yeah, when you start looking at what Matt was talking about with refunds and returns, the guys that are in the drop shipping segment, you really have to look at what is my lead time from the moment someone orders to the time it gets delivered to their doorstep. And you have to be able to adjust for that. And so the question is, do you just be honest with your customer and say, hey, this is on a slight back order. It may take 2 or 3 weeks to get to you. Would you like a replacement item, or are you willing to wait? And then the other little thing that I think is fantastic is shipping insurance. So we have a relationship with InsureShip because there are porch pirates. There is a situation where the Postal Service just chucks boxes around because they're so busy. And so there's going to be damaged goods where you can add shipping insurance. We have a relationship with a company called InsureShips. InsureShip, you can put it on there for $2.98 on every order. Number one, it increases conversion rates, which is great because it adds more validity to your product that you're actually offering that type of insurance. And number two, that $2.98, it only cost you $1. So you're putting $2 in your pocket, and that covers losses up to $5,000. So why wouldn't you do it? If 70% of the people take it, you're just adding an additional $2 in revenue to every sale. Well, at least, 70% of the sales or whatever the take rate is on that. And your products are covered for lost, stolen, damaged goods, which is fantastic. But I think going back to the drop shipping piece of this, as you were saying, oh, you go to a drop shipper, AliExpress or whatever, that lead time is a big deal. Like,
Yeah.
set the expectation with your customers. Like, you're ordering Black Friday, Cyber Monday, there's a good chance you're going to get it by Christmas. If you're ordering on the 15th of December, your husband, your child, whatever, they're not getting that gift. It's just not going to happen because there's so much happening in the shipping world at that time. So I think it's best to set that expectation with the customer right up front.
For sure. And that's a good thing to hammer on too, because earlier in Q1 and early Q2 calendar this year, obviously with the Trump administration coming in, there was a lot of trade war stuff going on. There was a lot of disruption in the cross-border trade between the US and China in particular, where, pretty much all of our goods are made. And that's rapidly changing, because people are starting to diversify a lot of their manufacturing. But if you are shipping from China, regardless if you're drop shipping or not, Saeed asked a question about like what's a good payment processor in the US and Europe. Well, a lot of payment processors are now picky because of what happened earlier this year and those lead times Matt just mentioned. They may say, hey, if you're shipping from China, even if you have an inventory stack of, 50,000 units on a shelf in Shenzhen or Hong Kong in an export processing zone, we don't want your business because we know it's going to take at least 5, 7 days to get here if you ship it express. And usually it's really going to take, close to a couple weeks. And, US consumers in particular are now because the Amazon effect where we expect everything to be delivered immediately. And so when you look at your payment stack, right, when you look at your customer service, when you look at everything in your business, you want to make sure, as Matt said, you're being super transparent to your customers. You're trying to deliver them the most transparency about when their package is going to arrive as possible, tracking numbers, updates, all that good stuff. And if things go south, which they do, it's business, shit happens. You're just transparent with them. Just let them know, hey, we're having an inventory issue right now. Hey, one of our suppliers went bust. We had to swap to a new one. It's going to be an extra week. Do you want a refund or do you want me to ship it out when it's ready? Do all of those things, and those are the right moves that you can make that'll save you tens of thousands of dollars of losses on the back end when those chargebacks start coming in, and potentially you get shut down by your processor. So it's pretty. That's what the redundancy is key for sure. But
Yeah,
understanding like your business and what you are selling, and how you should be utilizing your payment stack, how you should be communicating to your customers accordingly. That's super important to building a sustainable brand
yeah,
versus, a run and gun offer that's going to be out in 2 months because your chargebacks will start picking up. You'll get negative reviews and people will stop buying it. So,
yeah.
all good points there.
Well, one of the questions that came up about trust payments is we are talking earlier, the minimum. I think they look at 20,000 a month in existing business. It's not huge. Most everyone on this should be doing 20,000 or more a month in sales. If you're not, there are options. And Stripe is a great way to start to build up that um, that monthly recurring revenue, what they refer to as turnover, monthly turnover, and then switch over. Also, I'm from Israel, but work with the American market. American market, there's Mac can connect you with several processors that could help you bring your product into the. And it says Matt's hair is looking really solid today. I would assume they're talking about you, Matt, not me.
I've,
So thank
I've
you,
already said
anonymous attendee, whoever said that. Uh, And then another question is, I'm in supplements and have about 12,000 subs on a store. I'm curious what your thoughts are on Shopify subscription
Hmm.
apps like Seal or Skio and transferring subscriptions from Shopify into a platform like Checkout Champ. I don't want to lose them. So in a lot of cases, we have clients that come over and they're using Recharge or they're using some other subscription billing system within Shopify. What they'll do is leave, because every subscription has a life cycle. They will leave those subscriptions there and start putting new subscriptions on Checkout Champ. And people are worried about, oh, now I have to manage subscriptions in two separate places. Reamaze, Gorgeous, there's a whole bunch of systems out there for customer service that you should be using that actually unifies all that data. So it doesn't matter if it's in Shopify, Checkout Champ, and WooCommerce, and whatever. It's all unified into one customer service portal.
Yeah, this is a great point too that I want to highlight, some of the differences between a platform like Shopify or Checkout Champ from at least a payments side, because, payments guy. But when we talk about redundancy too, one of the great parts, one of the struggles with Shopify is that even when you're going into your configuration, you go into your settings, your store settings, you go into your payments, you basically can only have one credit card provider active at a time. And you'll have that tied to something like Seal or Recharge or whatever your subscription app is. The problem is that you can't have any redundancy there either. So not only migration to different platforms kind of becomes locked in with Shopify and it becomes a bit tricky. There are ways around it, but it is tricky. Um, and you do have to have a lot of subscribers to kind of justify the costs to get things moved.
Yeah.
But the biggest thing is that if you start to see, performance slip, or you have a problem like such as Shopify Payments says, hey, we're holding 25% of your settlements moving forward because we don't like your risk profile or whatever. Now you have no backup, right? You can't really move anything. And
Right
so
off the
there's
gate,
this,
it was converting at 30.
Sorry. How about that? All right, keep going, Matt.
yeah. So the big thing is basically if we're seeing, any sort of issue with your current processor, it's always gonna, you're gonna be stuck there, right? With Shopify, I think that's one of the biggest issues with Shopify payments, just Shopify in general, is there's no redundancy. So Matt, one of the things on your platform for Checkout Champ that's been helpful for a lot of merchants is that, you're able to kind of have a centralized place where you're managing those subscriptions and you have that redundancy with payment processors. So, I think it was, yeah, George's or Jorge's question. being based in Mexico with the US LLC, like, yes, there are payment processors that'll take you. We can get you set up, no problem. It's easy to do. There are only a few. It's not like any payment, there's probably 35 or so in the US that are pretty solid. Like only a handful of those are going to accept you with that type of setup. Um, but like it's doable, but you'll still want two of those probably, right? If you were to go on a platform like Checkout Champ, because if one of those goes down for whatever reason, right? Maybe they don't like you or you don't like their performance or something doesn't happen and doesn't you don't like it, you want to have a separate one. And the biggest thing that I look at is approval rate performance. One thing that a lot of people miss is that with payment processing, like your approval rates and your CPAs or your ROAS or whatever your North Star is from a marketing side, it's a one-to-one relationship. Um, and that's also an extremely important piece when you're looking at subscriptions. First time sale is huge to be able to lock in that MRR. So you want to make sure you're capturing as many of those first time sales as possible so you can get them to subscribe and have subsequent purchases, which are significantly higher profit as the LTV grows. Um, but yeah, I mean, there's a lot of stuff in the subscription space that is a little bit tricky, but overall, with subscriptions and payments in general, you're very constrained in Shopify's world. It's very easy to set up, but you're very constrained. And so it's better to do a little bit more legwork up front to have more flexibility in the future and kind of limitless scale.
Well, let me add on to that. So 2 points that I'd like to make. Number one, the higher your approval rate, you will win the EPC game because everyone's competing for traffic, right? And it's not just initial rebills or initial sales, it's also your rebill approval rates. You may have a 92% initial approval rate and your rebills are in the 60s. It has to balance out. You have to be with the right processor to do that. Stripe, you'll get great approval rates, but again, there's risks of working with them, and also you're subjected to a 2.9% rate and 30 cents a transaction, which is super expensive, but that's their out of the gate rate. There are other processors that Matt and other banks can put you with that maybe you're at 2.25 and 15 cents a transaction through the gateway. Well, that's a significant savings. So now you've just increased your margin. You may look at it and say, well, now I have 15,000 subscribers on Stripe. What do I do with them? We do migrations from one platform to others all the time. So if you have a $500,000 a month in revenue going through an expensive processor and you can save money on a new solution, we've done those migrations and your margins may increase significantly just by doing that one thing. I just read that 1%, just increasing conversion rates or increasing everything that you do by 1% can equate to millions of dollars in new revenue.
Yeah, so there's a big thing to take away there, and that's like the approval rates. A lot of people don't look at this because it's a payments thing, especially on Shopify. Shopify does not expose this data for most clients. Stripe does directly, but Shopify Payments does not. And so with something like Shopify Payments, your approval rate is going to be quite high. As you move into higher risk processors, it's not always going to be as high depending on which one you're choosing. So that redundancy is key because what you can do with more flexibility on a platform like Checkout Champ is like send, let's say JP Morgan as a credit card issuer is better on one payment processor and Capital One or Wells Fargo is better on a different payment processor. You can do that granular routing so you're basically maximizing your approval rates as best as possible, like you would with Shopify payments, but also be able to have the trust and performance without having to be shut down. I do.
Well, and it looks like we have a lot of international people here. And thank you, Kristen Johnson. We are a kick-ass duo. We know what we're talking. We've been doing this a long time. As someone said, I heard some stuff about with Reach about business having issues over there. You made an announcement 2 weeks ago about with Reach and closing down
Yeah.
some of their higher risk processing. You just want to address that real quick?
Yeah, of course. I'm sure a lot of guys on here have looked at it and probably spoken to me before. So I am a founder of Reach. I left earlier this year officially. Um, the reality is that they are not really focused on they do work with a lot of Shopify brands, but the Shopify brands that we were mainly poaching for years has been the very top tier Shopify Plus, think like Fashion Nova, Gymshark, those types of businesses. It was originally a business built for enterprise. I built out a huge SMB unit. Matt and I did a lot of business together on Checkout Champ. And yeah, the unfortunate side is their new board has basically made a decision that they are lowering their risk appetite significantly. So, anything with MRR, for example, is tricky to even get approved. And that'll be ebbs and flows. Compliance people tighten up their constraints, and then they lose more revenue, and then they say, hey, you know what? Maybe we should open the floodgates again, and then it comes back. But right now, we are in a constraining period for a lot of different payment processors, and Reach is included in that for sure. Um, because I've obviously, been one of the builders of the company and responsible for much of the revenue that fuels it today. I'd be more than happy to chat with you if you want to hit me up. I can give you my email or whatever. But yeah, it is probably quite hard if you are anywhere remotely high risk. Like basically, if you're worried about Shopify payments shutting you down, you're probably not going to get approved at Reach at this point in time,
Yeah.
which is
You
super
got two things
unfortunate.
against you got two things against you right out of the gate. Number one, your card not present, which puts you in a higher risk category. Now you're doing subscriptions, which puts you in an even higher risk category. So you just got to find the right merchant processing solution for you. And I think, as many people will tell you, I always tell them, communicate with your bank, your merchant acquiring bank, and let them just be honest with them, and they're going to help you if you're constantly communicating with them. I think, especially, let's say you hit a bump in the road, reach out to them and say, hey, this is what's happening. I want to stay ahead of it. What do you suggest? At least let them know so you keep that line of communication open.
Yeah. Yeah, I'd say communication is key. Same thing if you have disruptions in your fulfillment, if you have disruptions in your manufacturing, disruptions in your shipping, tell your payment provider because they want to know up front. Even you just going and telling them, it's not snitching on yourself. You're just being transparent with the people that ultimately they kind of have you by the balls. If things go south, they're going to shut down your money flow, and shutting out your cash flow. Cash flow is everything in this business, and if your cash flow gets nuked, like you just can't really scale. So it's quite important to make sure that you're transparent as possible with that, tactfully, of course, but for sure transparent with your customers and for sure transparent with your banks and your processors is a helpful way to get through Q4 unobstructed.
All right, so there's a question that came up. If I have existing subscriptions running through ShopPay and I turn off ShopPay as a payment method, I don't think you want to turn it off. I would just maybe remove it as that checkout option. Those subscriptions should continue to run because, let's be honest, they want that revenue also. That's where I would say 80% of that revenue in Shopify is derived from. But we also have auth.net as a main credit card processor plus ShopPay, plus 70% checks out with ShopPay. So my question is, on authorized.net, using a third-party processing solution, are you paying that 50 to 100 basis points for using something other than Shopify payments?
Yeah, they would have to.
You would have to. So if you're paying that on top of whatever your credit card processing your acquirer is charging you, you may be well above that 2.9%. So it may be a complete kick in the pants, which is a great segment for my conversation about Checkout Champ. So did you guys know, did you know that you could replace your native checkout in Shopify, in WooCommerce, and all the platforms with Checkout Champ's super light, super fast checkout and native one-click upsells with all the billing methods that we talked about earlier available to you without having to pay a penalty, and increase conversion rates, increase average order value. That is what's available through Checkout Champ. The other thing that I would tell you, as we're talking about how to win BFCM, the whole story for the last couple of months, and it's getting stronger and stronger. We just heard it at a big mastermind last week, is your storefronts for browsing, it's not for buying. So why would you ever send paid traffic to your storefront? Right? Which I was sitting across the table at dinner with at this big mastermind group. We had 20 big advertisers. And one kid, he's like, oh yeah, I'm doing $1 million a month. You know, I have a great store. We're doing well. And I said, oh, cool. What's your conversion rate? 1.8%.
Hmm.
1.8%. I said, the first thing I said is, what would you say to me if I told you that your conversion rate could be between 6 and 8% just by switching your checkout? And he's like, I would say that's great. And I said, okay, what if I told you that by taking your top products and turning them to single product landing pages, and that's where you're sending your paid traffic to, that your conversion rate could be between 20 and 30%. He's like, well, I would do that all day. He signed up the next day.
Yeah, it's pretty powerful when you just look at the simple unit economics. I mean, I've worked with some of the biggest brands in the world, particularly on the Shopify side. And when you really look at their underlying unit economics, their COGS, their actual conversion rates, like, yes, they are huge household brand names. It's a lot of stuff I mean, shit, I'm wearing Vuori right now. That's a perfect example. You know, their margins are so slim. You know, these guys are making maybe 5%, 6% profit at the end of the day. You know, maybe up to 10, 20 would be like pretty solid. But like for most of these fashion brands, particularly like more sustainable stuff, you know, these guys are not making a ton of profit. And like again, finance guy, I've seen the back end, I see the books. So like I
Yep.
know what they're making. And when you're at like 1.5, even 2% conversion rate, like 2.2 would be pretty solid for a pretty large brand on Shopify, which is pretty terrible compared to what Matt and I see on Checkout Champ. And again, it's just the way that you're selling. You're trying to build organic traffic through audiences and, you know, influencers and whatever. But you can do that same thing and just drive that traffic to your best sellers, to the item that that particular demographic or subset of your consumers really wants to purchase. And then you start adding on additional things, right? So you can say like, hey, this is the hottest selling item for, you know, Matt and Matt as our particular demographic, but then you make your purchase and you can also purchase the second hottest selling item, and that can kind of be an upsell into the sequence flow. So you can still increase your average order value, just as if I were to come to your website naturally and have to sift through the products and find the one that I want and go through the whole navigation. You know, my conversion rate is so slow because I'm taking time to search the site. So when
Yep.
you look at some of these huge brands, like again, they have small margin, very high volume, right? They might be doing 20 million a month, but at 5%, 10% margin, when you are able to hit a conversion rate from 20 million a month at 2.2 to 1 million a month at 20%, you're immediately able to be much more profitable on the front end, which allows you to scale the company faster. So that million a month can actually be a lot better because you're much leaner, you have less operations, you have less overhead, you have less people. You can scale a brand significantly faster and significantly more, you know, efficiently, without having to kind of go that big brown brand route that a lot of people do and have brick and mortar stores and big box office retail and all that. So pretty
Let me
pretty
jump into a
critical
couple of
there when you
questions
look
here.
at that.
Yeah, that's a great point. We have a lot of huge brands that don't even use the redirect to the checkout page because they're like, I don't give a shit about my 1.5% on my storefront. I'm going to get my 20 to 30% on sales landing pages, and that's all I'm running through my targeted Facebook and Instagram ads. But there was a question that came in: is PayPal shutting down merchants for high VAMP rates? The answer is no, because that is direct to bank account unless you're using their credit card processing. They may start looking at it, but that's not every conversation I've had with PayPal is that they're nearly fully insulated from the Visa requirements in VAMP. And I've also found out that um, through years and years of being a PayPal partner, that dealing with chargebacks and disputes is pretty darn easy. Easier from my experience personally than working directly through, a mitigator or chargebacks 911 or Disputify. It's easier to go into PayPal and deal with your disputes on a one-on-one basis. And then Shopify, uh, another one, shut me down with a 0.7% chargeback ratio after just $100,000 in revenue. I do supplements. Airwallex already declined me. What would you guys recommend for a processor? Hong Kong company setup? That's a Matt Steinbrecher question.
Yeah, this is a tricky one. Hong Kong's tough because most of the processor performance, like Shopify is great for Hong Kong businesses because the processor performance is good. But like Airwallex performance, because you're not selling to Hong Kong customers, you're selling to US customers or European customers, right? There's not a lot of people in Hong Kong, but there's a lot of businesses based in Hong Kong. The reality, though, is when you do payment processing, anytime you do something cross-border, it's extremely inefficient for the success rate because my bank, as a US consumer, may think that it's higher risk coming from a Hong Kong business. And so they'll flag it as potential fraud on my side. They'll say, I don't want to take liability for Matt to purchase this item.
Yeah.
So, from a performance perspective in general with Hong Kong, there's not too many good options until you hit kind of a scale of like maybe 250,000 a month or more. The best one at that point, I would say, is Nuvei. I've had a great relationship with them for years for, some larger Hong Kong-based merchants. Or you simply can set up a multi-entity infrastructure and just open up a US LLC, and it's significantly easier, or European LTD, based on wherever you want to go. I would say for a low end, Ocean Payments is another really popular one. I will say their performance is not great, but it is an option that a lot of people use at that revenue scale of around 100,000 a month in revenue. Um, they are a little bit slower to onboard. Airwallex is kind of a Stripe 2.0. They're a little bit higher risk. They also do all the banking and the wallets, but they're just as quick to turn you on and just as quick to turn you down. So Airwallex and Stripe in particular, if you're a Hong Kong-based merchant, those are the easiest ones to get accounts with until, again, you kind of hit that 250,000 a month in revenue mark, and then you can kind of move into some larger ones that have higher minimum requirements. The key with Stripe and Airwallex at that scale, get insiders, get people to tag your account. Happy to help out and, get people back up and running or whatever. But the biggest thing when you're starting out is you need a human to be named in your account. Talk to a rep. Don't just go online and not call anyone. You will get burned for it until you hit that scale, and then you can kind of go into the next level. So there's always
Matt
tiers
has
in
reps.
banking.
Matt has reps there. I have reps there. If you guys need
Yeah.
contacts, it's always best to have someone, not just applying on a dashboard and hoping for the best.
Yeah.
Having
Yeah, for
someone
sure.
really understand your business and how you're going to market as you're submitting your application is always better. All right. So the next question is definitely for you, Matt. I do have a partial question for this, but how much does using order insights impact lowering TC40s and VAMP ratios?
Yeah, so it's tough. So for order insight, like it definitely helps a lot. You do want to make sure you pass it. It does take some coordination and effort to make sure that it gets set up properly. A lot of the providers that can do this kind of stuff, like they'll kind of set it up, but it's not really dialed in. So something with VAMP and chargebacks in particular, it's really important for merchants to understand is like just because you pay chargebacks 911 or Disputify or whoever it might be, you need to make sure that your actual process for order insights for even just RDR and ethical alerts, all of that is really dialed in. So you have to be monitoring how much what we call leakage is happening. And for order insights, it's really powerful tool because you are able to minimize chargebacks for friendly fraud, which oftentimes is most of the chargeback reasons. And friendly fraud is considered a TC40, just as real fraud is. So real fraud would be a stolen credit card, right? Someone steals a credit card, makes a purchase, gets a free T-shirt. Great, they're off to the races and free Christmas presents for them. But friendly fraud is the one that most of us fight, and that's where the TC40 and VAMP problem is more rampant because it's so hard to fight pissed off customers. Like you can't win, especially in the US, man. Like you just can't win every time. And so it's really critical that you basically make sure you are providing as much information to customers as possible to be very transparent, give them the right contact information for your business through the order, which ultimately goes to the issuing bank, like customer's credit card. They see it on their descriptor. That really helps with the order insight implementation, and that will really help with your TC40 ratios,
Well,
but it does
also
take
you've
some
got the
coordination.
TC15s, and my understanding is that running using 3DS on your transactions deflects 100% of the TC15s.
Yeah, so with 3DS, it does. So in Europe, 3DS is mandatory. And so 3DS, for those that might not know, is basically just you get a 2FA on your phone when you type in your credit card, and your bank will either give you a push notification or an SMS. You type in your thing, and then you're off to the races, and your payment goes through. When that happens, and there is what we call an authentication from the user with 3DS, the liability shifts from the merchant for a chargeback, which is a TC15, to the issuing bank, which is like the customer's credit card bank that gave them a card. So if the customer ends up doing a chargeback, the issuing bank is like, dude, you did the SMS, you did the verification, like you were present at the time of transaction, with multiple device authentication. And so they will eat the fees. $100 order, €100 order. The customer's bank will eat the fees. They will not charge you for that.
Yeah.
In the US, we don't really have 3DS. It's not really common for us. You can use kind of frictionless 3DS, but it doesn't work as well. You can certainly turn it on, but it will have a big impact on your approval ratio performance, particularly at much larger issuers like Capital One is one that comes to mind. Their 3DS workflow is really, really trashy. So it like opens up as a whole new pop-up, and you have to like go through their wonky UI and UX, and then you get your SMS and you click go, and you basically lost your customer. A lot of the time they're going to think it's scammy, and they don't trust that it's coming from their bank. So,
Well,
uh,
so just so you know, and Matt, I know we talked about this. We're one of the only companies that, well, we have 3DS 2.2, which is frictionless,
yes.
but we
Yeah.
also have 3RI, which secures every single rebill,
Mm.
which is pretty cool, especially if that's deflecting the TC40s and you're fighting, chargebacks, with RDR. It's nice to have that on those rebills. And then there's a question: is it true that when using PayPal for credit card processing, a lot of the rebill transactions are actually pulled out via ACH from the customer's bank, even if the customer's original payment was made via credit card? I don't think that's true. I think it stickies to the credit card, but when you're using that checkout option, when PayPal pops up, you can actually select bank or credit card and how you're paying for that. And those rebills should stay on the credit card. But Matt, maybe you can confirm.
Yeah. So if it was pulled by credit card, it usually stays to the payment method on file. Um, and so with PayPal, there's predominantly three payment methods you can use. One is your PayPal wallet, so like cash that you have sitting in there. You have an ACH transfer, which comes directly from your bank, and then your credit card. So PayPal for sure prefers ACH because the true cost of ACH is like less than 1 cent.
Yeah.
Whereas a credit card transaction is like they'll charge you 3% or 4% or 5%, maybe up 7 or 8 or 9 or 10 if there's FX included wherever your business is based and the customer's based. But all that said, it's way cheaper for PayPal to pull ACH. So if they have a lot of they might do that for some use cases, but typically they'll follow whatever the original transaction was run on. So if the customer used a credit card as the payment method within their PayPal wallet to subscribe, it runs through the credit card rails. Because they kind of have to do an authentication for subscription. There are two different payment rails with ACH and credit card, and there's two different regulatory requirements that they have to basically what we call direct debit, which is like pull directly from your bank account for an ACH. And PayPal has to have authorization from the customer to be able to do that on behalf of the merchant because it's your PayPal wallet. And so if basically the customer gives you authorization to pull funds off their credit card for a subscription, that's for their credit card, but not for their wallet or their bank account.
So as you know, I see tens and tens and tens of millions of transactions every single month, and I have all this data. I will tell you, if you can use PayPal on your checkout, use it. It's going to be 30% of your people are going to select PayPal, and it has the highest approval rate of anything out there.
Yeah,
So if
100%.
you can use it, use it.
Yeah. Second only probably, well, I'd say the other highest approval rate is going to be like Apple Pay.
Apple
Because
Pay, yeah, Apple
it's
Pay is
so
pretty
closely
high.
connected to your device, and you just put your face on there and the authentication's so good. But yeah, I would say PayPal is great. The one thing I'll say as it relates to chargeback, a lot of questions about like VAMPs, chargeback ratios, all that with PayPal. what a lot of people don't do. So two things. We talked a lot about Shopify. Shopify Payments rolled out their I don't know, I forget what they call it, worldwide wallet or whatever for adding PayPal into Shopify Payments. Do not do that because the moment that you roll PayPal into Shopify Payments, you no longer have the ability to answer disputes in your PayPal account to your customers. So you lose that customer communication and all those disputes will turn into chargebacks.
Yeah, so you want to have a separate PayPal account outside of
100%. Always have a separate PayPal account. Do not subscribe to Shopify's thing. They did it for convenience for really small merchants, but for a lot of you guys that are more sophisticated, do not do that. Always have your direct PayPal account. The second advice that I have as it relates to chargebacks and, dispute ratios and not getting shutdowns from PayPal, which is always inevitable as well. Um, they're kind of a no one likes them in payments, but everyone has to use them. So they're kind of like the shitty little brother, but they're our little brother. It's one of those situations. Um, with
Well,
PayPal,
look, and we're sitting here talking about, highest approval rates, highest conversion rates. Use the tools that are available to you to achieve that
but
and
use them wisely.
wisely.
And the biggest thing with PayPal is like make sure a lot of people don't even look what I just mentioned with Shopify and rolling in the disputes. They're not really answering disputes. So PayPal is a very unique dispute process where you can basically go in and answer and basically negotiate with the customer, which is that goes back to their eBay times back in their roots, but you can negotiate with the customer in real time and make sure that you have people doing that every single day, especially during Q4 and peak. Go into your PayPal account, make sure you have a rep that goes in there, checks every single day for disputes, and start negotiating, offer them discounts, offer them refunds. Go in and do that so you can negotiate the dispute before it actually gets escalated and then negatively accounts against your PayPal dispute ratio. So, but yes, PayPal's great. Like definitely add it. It's massive, huge for conversion, but you have to use these tools wisely. In the same way, don't go live with Shopify Payments and have a super aggressive offer that's a product that's prohibited because they're going to shut you down. Don't go live with PayPal doing the same thing and make sure that you're actually answering the disputes. A lot of people do not do this. It's a massive, massive way to avoid shutdowns and fund holds from PayPal.
Yeah. I have just answered a question here. Just sending it. Let's see here. Should use a PayPal. 3RI. Can you explain how 3RI works for rebills in Europe? So 3RI is, so just so you guys understand, you have the merchant acquirer, which is Stripe, all checkout.com, Airwallex, that's the merchant acquirer. The issuer is the bank that's giving the consumer the credit card. So what happens on the transaction, we are sending, if you have a 3DS, we're sending to the merchant, the credit card issuing bank that, hey, there's this transaction. Can you validate this customer? And so they'll validate it. So that's how it happens on a single time purchase. 3RI, it says this customer is purchasing a subscription product. The subscription is going to rebill every 30 days. Do you approve this? And they'll send back an approval. And so now you're tokenizing every single rebill based on that one initial request to the merchant issuing bank. So that's how it works.
Yeah, and it all happens, behind the scenes where basically with subscription in particular, a lot of people don't understand. They think you just send a notification to the bank to charge it, but when a customer subscribes on their first sale, particularly in Europe, and why 3RI and 3DS 2.2 is so important, um, you are sending in, when we're sending technical payloads to the payment processor and communicating via Visa or MasterCard or whatever card network scheme between the customer's bank and the merchant's bank, the payment processor, we're basically telling them what's coming. So we can say, hey, this is a, 59.99 order and there's going to be rebills moving forward. And in Europe, this allows you to bypass the 3D secure authentication. So it's a lot less friction on rebills moving forward. But it also allows the customer's bank to say, like, yeah, this is good. We're going to accept liability on this subscription moving forward, which helps the approval ratio go up quite a bit. And it also helps with your friendly fraud too, because the bank will know that the customer originally sort of authenticated this, they okayed it, and now when you run that bill every 30 days in your cycle or whatever your payment cycle is,
Yeah.
it'll be significantly more secure.
What is the best tool to help reduce chargeback rates for PayPal? I don't know if I know of any.
There's not really a tool. A lot of the chargeback vendors are trying to build stuff. Like they try to intercept PayPal credit card transactions and use the descriptors from that to alert with CDRN, which is for Visa, and Ethica, which is for MasterCard. It's very, very difficult to pull off. It's still kind of in beta testing. PayPal is also looking into this. Um, but because of the way that they work as an organization, they don't really have an incentive. As Matt mentioned earlier, they're not really worried about VAMP because they have their own portfolio and it's yeah, they have their own weird infrastructure. Not going to get too deep into it, but the reality is the best tool to reduce your chargeback rate for PayPal, hire a customer support agent who is in PayPal every single day. And as soon as you get a dispute, any disgruntled customer, and they paid with PayPal, immediately contact them and try to go through PayPal to mediate the process or directly email them whatever their contact information is or they came into you. But better customer support is the best way to fix PayPal problems, 100%. But there's no RDR or Ethica to answer that question bluntly.
Someone asked about using third-party checkout and how it increases conversion rate. What are the main differences between using native and third-party? So third-party, number one, our pages are lighter and faster. So which means the moment someone clicks proceed to checkout, that page appears in less than 1 second, right? So speed kills. I don't know if you know this, but for every 3 seconds, you lose 40% of your buyers. So speed kills. You can do the math on that. But the checkout pages are not only lighter and faster, but they're fully customized. So you can put as many customer testimonials as you want to, and you can make it look as beautiful as you want uh, with any type of guarantees. And people love seeing those little buttons, right? Money back guarantee, delivery guarantee, all those little badges that go on that. But the more you customize your page, the higher your conversion rate is going to be. I'll also tell you the button. People don't believe me until they do it themselves. You get a button that says submit. It's just a basic boring blue button versus a nice big orange pulsating button that says complete checkout with, we can't wait to send you your order in smaller text beneath the, submit your order. Those things all increase conversion rates. And my team, they understand the best practices on what to deploy to make it work for you. I'm handling disputes and I need advice. With PayPal, it's straightforward, but Stripe is trickier. I run a sticker subscription club and use a shipping service without tracking. In my experience, without tracking, winning a dispute is almost impossible. Since responding to Stripe adds an extra fee, is it better to just let those disputes expire instead of replying and paying the fee? What do you suggest?
I would suggest just enroll in what's called RDR and Ethica. It's pretty easy to get done, takes a few minutes. Ultimately, it will save you customer service headache, and it will probably cost you less than the chargeback fees you're getting from Stripe, depending on your size and if you've negotiated. But their rack rate chargeback fees are going to cost more money than you basically just refunding the customer in the first place. You can certainly continue to try to fight those, but especially for shipping stickers, like paying for tracking numbers is going to increase your shipping costs, which, you know, already for the price point of a sticker versus like the shipping costs, like that's probably so high as part of your COGS. It might not make sense. So this is a tricky unit economics question where you just kind of have to look at like how much are you losing, how much time is spent. But generally, I would say like just refund those customers. You can do it programmatically. You pay a smaller fee than the chargeback fee, but I would most definitely, especially on Stripe, do not let those just turn into chargebacks and expire. It will bite you later and
All right.
and disrupt your business.
All right, so we only have a minute left here. So we're talking about converting holiday shoppers into long-term subscribers. That was the last topic we wanted to touch on.
Yeah, let's do
Give
it.
us give us your thoughts, and I'll throw some of my thoughts out there.
Yeah, I mean, I think the biggest thing now we see meta spend go up. You know, we see advertising costs go up. We see customers, be more and more susceptible to competitive marketing, things like that. I think overall, you need to have a brand narrative and you need to have stickiness that builds your LTV because adding subscription is probably the number one way for you to, print money for your business and your offer.
Well, not only that, but if you're selling one-time purchases and you're trying to sell your company, you're going to get a much lower multiple than if you have monthly recurring revenue. And
Yes.
it could be 2 or 3 times higher by generating monthly recurring revenue. There's some, I'm sure you know Alex Green, but he has a great agency that helps people build subscription type products. Like if you don't know what to do or how to do it, we have some resources that are available to you outside of the company that can really give you some great guidance.
Yeah.
But I would also say there are tools. If you have customers that are coming in and they're purchasing one-time products, but you have subscriptions that are available on that particular product, we have tools within the platform where you could say, okay, in 28 days, I want you to send out this email that says, Matt, I saw that you purchased this product. By now, you must have used it and you must love it. And if you'd like to have it conveniently delivered to your doorstep every month, click this button.
Yeah.
Takes them to a checkout form. All their information is pre-populated. They hit submit. Now they're enrolled in your subscription. They're subscribe and save. So there's a lot of subscribe and save techniques that you can employ that will increase your subscriber take rate.
Yeah. That's a critical one. Kind of the one click subscribe is huge.
We built, and we do this every year, a Black Friday, Cyber Monday 2025 survival guide. Can I see a show of hands of everyone who would like one sent to them? One, two, okay, there we go. There we go.
Definitely me.
So we got the survival guide that we're going to send out. And Matt, if you would, in the where is it? In the chat,
Yeah.
hit change it to everyone. If you want to drop your, how you want people to contact you, email address, whatever it might be, go ahead and pop that in there. And then I'm going to drop mine in there for everyone to see.
It's only letting me do hosts and panelists, but
Oh, is it? Here, drop it to me here. I have it in.
There you go. Yeah, you guys can hit me up on email. Happy to kind of go through. A lot of people had some specific situations like dispute stuff. Happy to chat through it. Give you guys just a quick, 2 cents and shake of like what you can do. Payment stuff is usually pretty case by case and specific. So, I can give you the broad strokes and I can give you a little bit of threads to pull for your business. And if I can help, I can help, but otherwise I won't waste your time or my time. So it's
All
typically
right,
how I do things.
I dropped Matt's contact information. You want to reach out to him. I dropped my contact information. If you have any more questions about Checkout Champ, we'd love to hear from you. I am going to send out the survival guide to everyone. And thank you, Matt, for joining and doing this with me. And I hope everyone got a lot out of it. Sorry, we only had an hour to discuss. I'm sure we could probably go another 2 hours, but thank you, everyone, for attending today.
Yeah, thanks, guys. We'll see you next time.